right, good afternoon, everybody. This is Todd Mitchell for the free video today, Tuesday, July 29th. If you recall back to yesterday's video, I was trying to get long the E-mini S&P 500 futures contract, and you'll remember that I was trying to get long down here at 1961.5. Remember that? Just if you don't, go back and review yesterday's blog video, okay? Trying to get long right in here as it moved up to 64. Remember, I was trying to get long. Market pulled back. But remember what I was telling you? I was telling you that down in this area was a minor key trade zone where basically is a support area where you'd be looking for a bounce, right? A bounce in the market. If you recall, the market opened up here, right? Yesterday on Monday. Market dropped down pretty severely, right? But it hit a key trade zone. And again, Craig Hill and I teach this in the opening bell income strategy. We're trying to get long at 61.5. Now, Craig got long and he caught a portion of this move up, but I missed it. And I told you that I thought it would be, a move up to at least 1967, which would take you up to like right in here. Well, the market, as you can see, continued to move up, right? Officially changed that actual trend from this high, right? From this high down to the low of the day. I mean, the official trend intraday was down, right? This is the low, bounced up. But when the market ran up to this high, we'll just call it an NH, new high, the trend had changed from down to up, even though we knew down in this area should act as support and the market should get a bounce. So looking back, and if you watch that video, I was completely right on target when I said that the market should bounce minimum to 1967, which it obviously did. It moved a lot higher than that, as you can see. It moved up, but at this point, when the market continued to move up, if you were flat the market and you had made your profit to the upside already, an area in which you would have been looking to get long again would have been right down in here. And then, as you can see, yesterday staged a really nice rally there at the end of the day as well. Took out the initial high of the day when the market opened up, as you can see, and hit this high and then traded down. Okay, so again, I just want to do a really quick recap of what happened Monday, which was yesterday, okay, from the video that I recorded yesterday. Okay, let's move on into today and how you could have traded today based on our key trade zones, based on the opening bell income strategy that we taught last month. Okay, the market opened up a little higher, right? Opened up right in here today, right? Tuesday the 29th, opened up, came down. This is where it closed on Monday. Market was unable to fill that gap, and then the market ran up. Now, before the market even opened, Craig and I had pinpointed a key trade zone right in here between 1978 and a quarter, okay, and 1980 and a half. That was a pretty major key trade zone, 1978 and a quarter to 1980 and a quarter, or 80 and a half rather, which means this area is resistance. So as the market was rallying from this low up into this area, this was a key trade zone that you would have been looking to go short, okay? And as you can see, market hit, what, 1979 and a half, I believe it was, 1979 and a half, and then consolidated for about a half hour right in here after hitting the 1979 and a half, consolidated, couldn't go any higher, and as you can see, the market dropped off nicely. So again, key trade zones are very important, not only when you're day trading, but if you're swing trading or position trading. Again, any market, any time frame. Again, what I'm showing you here, though, is the E-mini S&P 500 futures. I personally prefer using, okay, market just closed actually, 3-minute chart. So a really good trade example right here to go short. And look at when the market dropped down, okay, carried over from the prior day. Remember, we had the key trade zone down in here where we were looking to buy it at 1961 and a half. I actually missed that trade. Craig Hill actually got the trade. This is a key trade zone, okay? Again, that key trade zone could have been carried over to today, okay? So when the market sold off from up in here, it traded from one key trade zone, right, resistance, which is essentially a sell area, all the way down to the key trade zone we used yesterday on Monday, right? A support area, which is a buy area. And look at where it dipped down to, the key trade zone from yesterday, and then bounced again. So again, using these key trade zones are very important, okay, and work phenomenally well when you're day trading. So hopefully that helps. Have a great evening, and I'll be back with you tomorrow morning. Bye for now.